Hello traders, Jason here with SwingHigh.com. It is Monday, January 25th, 2010, and this is your post-market analysis. After 2 or 3 consecutive sell-off days, we have a small bounce today, and looking at the broader market indexes here, we have the S&P up 0.45%, the NASDAQ up 0.29%, financials up 0.27%, the Dow up 0.23%, and the Russell's up 0.05%. So it's a small bounce, which is not surprising after what we've seen on the daily chart. I'll show you that in a minute. But right here we have the 30-minute chart. Most of today was spent chopping around this 110 mark on SPY. It's a major support and resistance area, so it's not surprising to see us hold up here and chop around sideways. We did fill the gap. So this morning we gapped up and then sort of filled the gap actually. For it to be a complete gap fill, we would have needed to see 109.20 tested. Didn't get quite that low. I have a couple rogue candles here that wasn't the real blip. It was just a mistake for my software. So we didn't fill that gap, but we did chop around 110, testing it away, and closed below the 110 mark. So that's important for the bear side. Let's look at the daily chart here. Here we have our rising wedge and a definite breakdown on good volume. If you remember on Thursday I was talking about that, and I wanted to see some continuation to the downside, which we got on Friday with almost exactly the same amount of volume. So we had a lot of volume confirming this breakdown out of this rising wedge formation that is very bearish. What I would need to see from here is some more continuation to the downside. We'll probably get some sideways chop here. We'll probably make a bearish pennant or a low base formation after a sell-off. And then break down further to the downside. But we do have a lot of support to fight through. This 108 mark is going to be really big right down here. So if we can get through that, if we can close below 108, it's definitely going to be very bearish for the markets. And I would like to see a swing low and a lower swing high from here. That would help to confirm the move downwards and help to confirm a rollover here, or a reversal, if you will. Today, I spent most of the day adding to bear positions and protecting my long positions by tightening up stops, which I'm not giving you any recommendations, but definitely be wary of the fact that the markets look very bad here and look like they want to sell off. Let's take a look at the market internals. We have the VIX dropping 7% today, but after this huge run-up, that's not too much of a pullback on the VIX. 7% is big for such a small up day in the markets, but we are still well above 25 here. So fear is still here in the markets. We'll have to see what happens over the next couple days with Bernanke and some other news that's coming out. The TRIN, sorry about that. The TRIN was bullish today, drifting towards the neutral zone for most of the day. And the TRIN Q was actually quite bullish today. The tick started the day in bearish territory, went into bullish territory, and then dropped, which corroborates the move in SPY nicely, as you can see here. So we started low, went to test to the upper side, went to test above this 110 mark, and then closed below it. The tick Q was a little bit different in that it was mostly bearish today. So we're seeing some divergences in the market internals, which is not surprising on a sideways chop day. And it looks like the markets are not that much stronger today, even though we were up. This little doji type candle in the middle of this big candle here doesn't really indicate direction in either direction. So I do expect a consolidation pattern to form here and then some continuation to the downside. Thanks for being a part of SwingHigh.com.